Hello monsters, this is Fahad. I'm back. Today I want to take a look at one of my favorite stocks that I actually already own, Golar LNG. Symbol is GLNG. I think this is setting up for a breakout. Now I've owned this stock and I'm down a little bit because I was buying it back here in 2015 at different prices. So I averaged down a couple times. I believe in the growth story in this one in the long run. And I think it is finally starting to act better, technically speaking. It is not even a resource stock. That's the funny thing about this. It's not a resource stock, but it gets crushed, with energy, and it trades like it's a resource stock. But anyway, so I'm gonna take you guys step by step and show you exactly what I'm looking at. So here is the daily chart. Now, so here it spiked big time on January 22nd on very, very high volume. It was crashing for a long time. It spiked big time on January 22nd. And the news at the time, the company signed a very large, long-term, 8-year-long contract with Schlumberger to provide the FLNG trains and all other kinds of stuff, which really boost the forward outlook from 2017 and onwards, from 2017 to 2020. So that was this spike on very high volume back on January 22nd. And then right here, in late February all the way up until the first week of March, it spiked again multiple times on very high volume because that time the company announced similar very large contract with ExxonMobil. And so, but what happened here, it came up to right here around the volume over price resistance, which you can see up here. It came up to right here around 2120 and rolled over. Then it tried again, came up to 2120, rolled over. Then it tried again in mid-March, rolled over. And now it's trying again. And this time, while the volume is not, it's not as high as previous time, but the simple basis bull case here is, technically speaking, is that if you're going to keep trying to poke something, so many times, 1, 2, 3, 4, and now the fifth time, ultimately you're going to break out. Ultimately it's going to rip higher, and I think that moment is probably coming pretty soon. Even if it doesn't break out, and if it gives you another pullback, probably goes back down to this range around $17.50 or $18. That's $2 or $2.50 to downside. It's not huge. It's like 15% or something, 10-15%. You can add on that weakness because ultimately I believe it is setting up for a breakout and a move higher. So where is it going to go? So again, look at my volume over price resistance is right here. So here is the level that I'm watching. So here's your volume over price resistance that I'm talking about. And if it breaks out over here, the next most logical resistance is all the way up here, which is 2650. Call it 2640 to 2650. It's all the way up here. So I'm just going to put a line through this so you can see this clearly. Right here is a trend line. Right here, let's put it here, add the properties, and change that to this, and change that to this. Here you go. So there's my target. If it breaks out from 2120, I think you're going to see this go higher to 2650. That's at least what, 15-20% to the upside from here. That's a lot of money to be made in this particular gap. It's nothing but air pocket. To show you another way of technically, if I simply go here, here's a chart. Let me make this bigger. Here you go. So this is from the stock charts. This is the volume over price resistance right here. As it's trying to break out, the MACD is turning higher. The RSI is already giving the signal. If it breaks out here, all the 200-day moving average is all the way also at 2650, 2640, 2650. Right here, 26.30. If it breaks out to here, this is the next big air pocket here. I think you're going to see another $6 to upside in this, which for a $20 stock is pretty significant on a percentage basis. So that's what I'm looking at. That's the technicals. On the option side, there's not much activity to note. Now previously we used to see ton of call activity in this, but they have been absent for a while. Maybe they gave up finally trying to pick bottoms in the stock. But they gave up. Maybe they will return in the future. Not seeing a lot of call activity in this. Some small, very tiny June 25 call buying, some small September 25 call buying with stock at 2074 right now. But there was some recent history of large call spread bought. If I go to the activity tracker right here, open order per activity tracker. You will see on March 7th I recorded buyer of 4,000 January 17 25.35 call spread for 230. All right, so this is the guy right here. January 17, go out to January 17, they bought 25.35 call spread. They bought 4,000 of these, and they still remain in open interest, and they paid $2.30 for that spread. So quick math, 2.3 times 100 times 4,000, that's a $920,000 bullish bet that remains in the open interest. I expect a lot of leap call buyers will show up as the stock starts to break out from here, because you have this big air pocket coming up. Now, quick rundown on the fundamental side. You guys know the bull case here that I presented many times. But I'm just going to show a couple things. First, from Citigroup. Here is Citigroup, and this was on January 22nd. This was the day after, the day off when the company announced that very large contract with Schlumberger, which is right here. This big candle that you saw on January 22nd. This one came from Citigroup. Now, the line that catches my attention is really the bull case they are presenting, because this is exactly the bull case that was confirmed by Morgan Stanley as well. So this is Citigroup, and this is what I like about the forward earnings. We believe the potential scenario outcomes for Golar FLNG projects are attractive, blah blah. We believe the crux of the story is the potential for substantial EBITDA contribution from one or more FLNG projects. And then it goes to talk about one of those big FLNG projects will be called Hilli, which is currently being converted at the shipyard, and it will be delivered into service during second half of 2017, and will begin generating EBITDA of $170 million starting next year. And they believe that's only based off 50% of the capacity, which means the upside just this one project, there are 7 projects. The upside on EBITDA next year, just from this one project, could be as high as $400 million annually. Once it goes into service starting from second half of 2017. Let me explain this very clearly. The current market cap of GLNG is $1.9 billion. There are 7 very large FLNG projects rolling out. This is one project that will start next year with $170 million EBITDA, and with only 50% of the capacity rising to $400 million annually. That's one project. Multiply, all these other projects are different sizes and everything. This is exactly the kind of story that gets me very interested, because I believe the consensus is the stock is just simply so undervalued based on what the forward outlooks look like. So that's Citigroup right here. Another thing I want to show you is this chart right here. This comes from Morgan Stanley. This is one of my favorite that I have kept in my file for a long time. It basically summarizes everything that you need to know. Now, it might be a little hard to see on my screen, so I'm going to try to make it as big as possible. But here's a simple case. So here's, by the way, this report from Morgan Stanley came out in December. So this was before we saw a very large contract signed from Schlumberger, which is not in this table, and a very large contract signed with ExxonMobil on March 4th, which is not in this table. Okay. So, anyways. This is the simple math over here. Based on what they believe are the average liquefaction fee for 3.5 on the forward contracts that have been signed previously, here's the simple math around it. Okay, so these are the different projects that are going to be coming into service going forward. $170 million EBITDA. That's the one that Citigroup was talking about. That's 2017. The next project also starts in 2017. $102 million EBITDA. Next one. Then 2018, 102, 346, and you start adding them up. You're looking 3 years out, 2 to 3 years out, and you started looking at a stock that basically will be producing almost $1.8 billion in EBITDA run rate annually. Okay, 1.8 billion. This does not include Schlumberger contract. This does not include ExxonMobil contract. Those are some of the biggest ones announced since the start of the year. And keep in mind, the market cap is $1.9 billion. I mean, honestly, what is the multiple you have to apply on the forward EBITDA multiple? I understand it's multiple years out, but if I assume really only just 4 times EBITDA multiple, all right, you're looking at $1.8 billion times 4, what you're looking at about $8 billion company. The market cap is $1.9 billion. I mean, fundamentally, I can make a bull case that the stock honestly maybe goes to $70, $80 a share, maybe $100 a share 3 to 4 years from now. All right, and so that's my bull case. But I'm going to take it step by step. The market, I think, the market is forward looking. Always keep in mind. So by the time 2016 is ending, we're going to start to base the stock based off what this potential is in 2017. So these numbers, these projection numbers, will start to come into play. So I think you will see some improvement in the stock going forward from here. To put this into another perspective, this one comes from my activity tracker, in which I've basically showed this multiple times. Here's a simple case. Take the same table that I just showed from Morgan Stanley and simply put it on the EPS format. Okay, so what does the forward EPS would look like? As these different FLNG projects, these different trains come into service, this is what the progression looks like of earnings per share. $2, $4, $6 as all these earnings projection come for free. The chart is kind of like broken out. It does not show the full picture, and I was trying to collect the full thing, but I can't grab it. But basically the point is that by 2019 you're looking at, here's the EPS projection from here. By 2019 you're looking at $8, $9 earnings per share. And this will start to come into play starting in 2017. So you're looking at $2, $3 earnings power, and then gradually rising in the next 3 to 4 years all the way to $9 to $10 earning power. Again, apply what? A 10 times price to earnings multiple, maybe 12, 15 times price to earnings multiple. You can do the math where the stock is going to trade based off of that. Currently, where is that? It's trading at 20 bucks. It's trading at $20.80. These are the reasons why I've always owned the stock, and I continue to add to position. It's one of my biggest positions in the portfolio, and I think in very short term the stock is trying to break out and it's going to start to run higher. Now, there are a couple of ways to play this. I'm simply long common, and I think that's the easiest way to do this. The reason why I'm long common is because it pays a very good solid dividend. It pays 45 cents every quarter in the dividend, which is pretty healthy, and I think that dividend is going to start to move higher as those EBITDA numbers start to come into play. But if you really want to just trade it strictly based off of the options, my suggestion is to go straight to January 17 and buy in the money these April 20 calls. Slightly in the money stock is at 2080. Go to January 17 and buy the 20 strike call. The bid and ask currently is 510, 560. I think you can buy it for 540 to 550. And just hold on to it. Just hold it. Just tuck it away into a corner somewhere, and then just don't look at it over the next 8 months until the end of the year. And by the time the year starts to come to an end later, then you can roll these calls out to January 18 sometime, maybe to a higher strike or something. But that's the simplest, easiest way to trade it. Stop worrying about where it's going to go in the short term, because we have to. It is not a resource stock, but it trades with the crude oil, and maybe crude oil is printing a double bot or double top right here. By the way, crude oil has major resistance coming. These volume over price resistance around 44. We're at 42.1. Maybe it will roll over a little bit from here. We'll see. We'll see where crude oil goes. But as far as GLNG is concerned, just go straight to January 1720 strike calls and buy them for 550 or less, and just put them away. So that is my play. That's it.